Hello, good afternoon, everyone.
Good afternoon.
All right, welcome to the Office of Tax Appeals, or OTA for short. My name is Andrew Wong. I'm the lead member of the OTA panel that will be conducting the oral hearing for this case. We're not on the record yet, just to note that. On today's panel, in addition to myself, we have Administrative Law Judges Shireen Ridenour and Keith Long. Also present is our hearing reporter, Ms. Lynn Alonzo. Before we go on the record and get into the specifics of this case, I'd like to cover a few general matters. This hearing is being conducted electronically. All participants, including the panelists, are video conferencing into this hearing. This hearing is being live streamed to the public, and a video recording will be made available on OTA's YouTube channel. As a result, please be mindful of any personal, confidential, or sensitive information that you might share or display, for example, home addresses or social security numbers. Also, verbatim and prepare an official hearing transcript, which will be made available on OTA's website. To help Ms. Alonzo make a clear record, I have four requests of the parties. Number one, please speak slowly, clearly, and directly into your microphone. Number two, please do not speak over each other or interrupt when someone else is speaking. If someone else is speaking or asking a question, please let them finish. Number three, please answer verbally using, don't just nod or shake your head. And number four, please mute your microphones when not speaking so that they don't pick up anything inadvertent or confidential. If Ms. Alonzo cannot hear, understand, or identify someone who is speaking, she has permission to interrupt the oral hearing at any time to get clarification. This oral hearing is taking place before OTA, which is a separate state agency from the California Department of Tax and Fee Administration, or CDTFA. OTA is not a court, but an independent appeals body and is staffed by tax experts. As I noted earlier, I'm the lead panel member for purposes of conducting this oral hearing. However, my co-panelists and I are co-equal decision makers and may ask questions of either party during the hearing. Our three-person panel will decide all the issues presented to us, and each of us will have an equal vote in making those decisions. All right. Ms. Alonzo, are you ready to go on the record? All right, thumbs up. Let us go on the record. This is the appeal of Sukar and Sons of California before the Office of Tax Appeals, OTA case number 240816985. It is Wednesday, December 17th, 2025, and the time is 1:01 p.m. We are holding this hearing online via Zoom. I'm Andrew Wong, the lead member of the three-person panel hearing this case, and with me are Administrative Law Judges Shireen Ridenour and Keith Long. Will the individuals representing the appellants, Sukar and Sons of California, please introduce yourselves?
My name is Greg Yagma. I'm the attorney for the appellants, and I have Mr. Steve Schnipper here who will testify.
Thank you. And Mr. Ferris Sukar is not here, is that
He
correct?
is not. He is not.
Okay, thank you. Individuals representing the respondent tax agency, the California Department of Tax and Fee Administration, or CDTFA, could you please introduce yourselves?
Good afternoon. This is Ravinder Sharma, hearing representative for CDTFA.
Hello.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Hello.
Good afternoon. I'm Christopher Brooks, attorney for CDTFA.
Hello. All right. So we will be going over the issues that we'll be covering, going over exhibits, witnesses, and then the time allocation before getting into the presentations. We are considering two issues today. Issue number one is whether further adjustments to the measure of unreported taxable sales are warranted. And issue number two is whether relief of interest is warranted. Is that a correct statement of the issues, Mr. Yagmai?
Yes, sir. We have an issue with the audit methodology and also the abatement of the interest for the two issues.
Great. CDTFA?
This is Ravinder Sharma. That is correct. Thank you.
Thank you. Let's talk about the exhibits now. Appellant has identified and submitted proposed Exhibit 1, which was a copy of an OTA case called Appeal of Gorin. And then Appellant supplemented that proposed Exhibit 1 with an 836-page packet of additional information containing sales and use tax returns, federal income tax returns, bank records, and other financial documents. Mr. Yagmai, are there any other exhibits that you wanted to submit?
No, Your Honor, we just had adopted what the opposing party had as opposed to resubmitting, and we just adopted their bait stamped in case we needed them also.
Okay. CDTFA, did you have any objections to the proposed exhibits?
This is Ravinder Sharma. The department is not aware of the relevance of these documents, 836 pages. Some of them are duplicate, but there's no cover sheet or summary attached to these documents, but still the department has no objection to the submission.
Okay. So appellant's proposed exhibits 1 and supplemental documents will be admitted into the record as evidence. And CDTFA has identified and submitted proposed exhibits A through G as evidence. No other exhibits to submit, CDTFA?
This is Ravinder Sharma. That is correct. No other.
And Mr. Yagmai, did you have any objections to CDTFA's proposed exhibits?
I did not have any objections, and I just want to clarify, I have not an exhibit, but just sort of a demonstrative summary that I may use in the presentation, but it's not an exhibit. I just wanted to make you aware of that.
Okay. Did you submit that to us or?
I did not. It was just something, it's just a summary is all it is. It's not, again, it's not an exhibit. It's just something I was going to use as demonstrative.
Okay. All right.
I sent it to Mr. Rios earlier today. Just wanted to know if I could use it on a share screen. It's nothing in dispute. It's not new evidence. It's just to simplify, some dates. It's a timeline is all it is.
Okay. Rather than sharing your screen to show that, is it possible that you could email it to OTA and the other party, and then we would just refer off of that?
Absolutely. Yeah, I could do it right now. It's a one-page document. I can
Okay.
submit it.
Great. While you do that, I will just mention that CDTFA's exhibits A through G will be admitted into the record as evidence. Okay. The next, while we wait for that from Mr. Yagmai, I was going to go over witnesses. CDTFA, you have no witnesses, is that correct?
This is Ravinder Sharma. That is correct.
Okay. And Mr. Yagmai, you had one witness, Mr. Schnipper, is that correct? Oops, Mr. Yagmai.
That's correct. That's correct. I was just emailing. So I emailed the one-page demonstrative evidence, and then there's another one-page sort of demonstrative to go. I just emailed it to everybody. It's two separate one-page documents.
Okay, perfect. And then OTA staff will forward it as necessary to the panel and CDTFA. Okay. I will swear the witness in right before I turn it over to Mr. Yagmai.
I do have a housekeeping question, or I didn't know if
Sure.
it was proper to give a short sort of opening summation or to try to
Yes,
give an overview.
Yes, absolutely. I will once we get through these housekeeping things, I will turn it over to you for your presentation, and you can use that however you want. Presentation and then witness examination, whatnot. And so we'll go over that just 1 second.
Yes, sir.
Okay, so it was, let's see. Okay, it was anticipated that the oral hearing would take approximately 130 minutes. Mr. Yagmai, you've asked for 90 minutes total, which includes the witness examination. You can break that up between your opening and witness examination, and then a rebuttal and closing at the end.
Okay.
Leave that to your discretion. And then CDTFA, you've asked for 25 minutes total. Is that right?
This is Ravinder Sharma. That is correct. Thank you.
Okay, great.
One of the documents I just emailed was something I was going to use in the open. Again, if I'm not able to share a screen, which
We have, yes, we have received it, and they've been circulated to us, the panel.
Okay.
So,
the timeline was the one I was going to use for the open.
okay. Got it. We got the timeline and then something else, calculations. Is that correct?
Correct.
Okay.
That would be for Mr. Schnipper's testimony.
Okay, got it. All right. Any other questions, Mr. Yagmai or CDTFA? Mr. Yagmai, let's go with you
No,
first.
Your
Any
Honor.
questions?
No,
Okay.
sir.
All right. CDTFA, any final questions?
No question. Thank you.
Okay. All right. So we will turn it over to Mr. Yagmai for your presentation. Oh, let me swear in the witness really quick. Uh, Mr. Sh oops. Mr. Schnipper, could you please raise your right hand? Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth? I believe you're muted, but
I do, Your Honor.
Okay, great. Thank you so much. Just to let you know that after you testify, CDTFA will have an opportunity to cross-examine you and ask you questions, as will the panel. Okay, so I will turn it over to Mr. Yagmai. You have 90 minutes.
All right, thank you, Your Honors. Sukar and Sons of California, Inc., which I'll refer to as Sukar, is a company that originated out of Birmingham, Alabama, where I am. There were two brothers, Sam and Clint Sukar, who started this business. Sam lost his battle with cancer in the summer of 2018 when this audit began. And I actually met in the Riverside office with the CDFTA the day of his funeral, and that's how we started this audit. Sukar is a franchisee of Cricket cell phones. They are prepaid cell phones that customers come in that they will buy phones, accessories, and another major thing they do is make payments there because these phones are prepaid in the sense of if a customer doesn't pay their bill by the first of the month, Cricket automatically cuts it off. So customers will come pay cash in the store or make other forms of payment which Sukar solely passes on to Cricket. And there was a lot of revenue generated that way as they pass through. As you will have seen in some of the exhibits, the bank statement submitted by both sides, they're referred to as TIO, is the acronym, TIO payments. And so you will see a lot of TIO payments that are a significant amount of money. What's important to understand is Cricket controls the point of sale system. You'll hear the phrase RQ. That is the acronym that Cricket uses for their POS system. And again, Cricket has the sole control over it. And it's really the reason that we're here today. Because what Cricket was doing was you'll hear the term trailing credits. And all that means is solely on cell phones. Let's say if there's a cell phone for $100 and it's discounted to a customer for $65, Sukar may get a trailing credit to their account for phones in the amount of $35. And what Cricket was not doing was taxing the customer like they should have been. And we ultimately understand as the taxpayer, that's our responsibility. We're not denying that. But really, that's how the problems in this whole situation began, was that Cricket was not properly charging the sales tax to the customers on these discounted phones. And it's important to understand it's only on the phones. It's not on the accessories. It's not on the payment. It was just on the phones. But luckily, Cricket figured out the problem, and in the second quarter of 2016, they fixed the problem. So come Q2 2016, they started charging the proper amount of sales tax on these trailing credits. So we've come before this honorable board today, admitting that we owe money. There's no doubt about that. It's the amount of money that we disagree upon. And Mr. Schnipper is going to be able to enlighten us more on the amount and what. And to understand Mr. Schnipper's qualifications just briefly, he has been in sales tax audits representing clients some 200 times. And he's also represented cell phone dealers like Sukar on approximately a dozen occasions. So he's very familiar with the business. He's prepared tax returns for cell phone businesses at least a couple hundred times. So he understands the Cricket business model. He understands the trailing credits. He understands how the proper taxes are supposed to be allocated, which is important in this case. And what his opinion is going to be is that the base amount of tax that Sukar owes is $100,540. And one of those charts that we have submitted to you will show the calculations and the breakdowns exactly. Again, it is for the 2015 timeframe that the money is owed in the first quarter of 2016. because Cricket fixed the problem in the second quarter of 2016. And how we also know this is true is that Miss Lisa Nickerson, who is the auditor, Miss Davis's supervisor with CDFTA, did not issue a negligence penalty. And the reason that occurred, I went and met with her in person at the Riverside office, was because they acknowledged that the issue was originally created by Cricket, but ultimately our responsibility. We all agreed upon that too. That's why they say we underpaid some $500,000 in base sales tax, that there was no negligence penalty and there was no fraud penalty, was because of the issue with the RQ system in the trailing credits. And so Mr. Schnipper will go through that some of the calculations that Ms. Davis tried to extrapolate couldn't be accurate based on the number of locations, based on the sales. Again, Sukar started in late 2014, so they were a new business out there. They had very few locations. They only had, I believe, 5 locations in the beginning of 2015, and they started to expand. And I think by 2016, they had 22, 24 different locations. And so based just purely on the numbers, you will see that the number of sales tax that was paid by Sukar greatly increased in the second quarter of 2016. And the reason that's important is that's when Cricket fixed the problem with the RQ system. And so I think the numbers will bear out what Mr. Schnipper is going to tell us and how it greatly differs from what Ms. Davis's audit of somewhere around $500,000. Now, I admit the CDFTA has worked hard on this case. We've met several times. I think originally when I got involved, their tax, they claimed it was north of $1 million. And they have worked and come down and come down and come down. And we still think that they have the methodology wrong. And the numbers ultimately will bear out at the $100,540 mark. The second issue, which has been mentioned several times, and really the chart that I submitted by email shortly ago will really be beneficial, is a purely legal one that your honors will have to decide. It is a timeline of the taxpayer's request in appeals proceedings. None of these dates are in dispute, and that's based on the CDFTA's responses. And I think really it's allocated in their response that are bait stamped 5719 to 5721. In those 3 pages, we're all in agreement on these dates. That July 2nd of 2020, the taxpayer formally made the request for an appeals hearing. There's no disputing that whatsoever. There's no disputing that from December 23rd of 2020 until March 18th of 2021, it was in the settlement division. And it's interesting in their response on the 5719 to 5721, the CDFTA kind of says, well, that's in the peer review of the legal division. That's strictly the legal division's department, not ours. So it was in the settlement division for 85 days. Then June 9th, 2021, again, there was another request made for this in-person hearing for the appeals conference. Now, here's where the time frame, in our opinion, becomes just de facto unreasonable in the delay. From March 19th of 2021, and this is per their own documents, until March 21st of 2023, when the appeals hearing was finally set, was 732 days. That's undisputed, 732 days. And then when we got the appeals hearing set for March 21st, we said, hey, we have a little bit of a conflict. And they said, well, you only have 30 days to fix this issue. So we had waited more than 2 years, and they said, you got 30 days to fix it. They gave us certain days of the week we had to do. And finally, we said, well, we can't do it. And they said, you have to do it by Zoom. And we said, sure. Those are undisputed, and they have never given a reason for the delay other than this, that the taxpayer requested an in-person hearing. Now, when they submit the form, when you ask for a hearing, they say in-person or not in-person. They don't say it's going to take any longer. They don't say you might wait 2 years. They simply make the offer. Do you want to do it in person or not in person? And based on the several issues and the several times that we had met with the CDTFA and actually had some positive meetings, we said, we want to do it in person. There has been no other delay other than the maybe 2 weeks caused by the taxpayer that delayed this entire process. And finally, we had the appeals conference on April 4th of 2023. So from July 2nd of 2020, when we first made the request, until March 21st of 2023, that's when the hearing was set, it was 992 days. In their response, the CDFTA on those pages from 5719 to 5721, they again defer to, well, that's the legal division. From March 19th of 2021 until March 21st of 2023, those 732 days, our hands are off of it. That's the legal division. We don't really have anything to do with it. And so when you look at the statute that governs, and I put it on the bottom of that sheet, which is 6593.5, which deals with the sales tax that we're here about, it says when the failure to pay tax is due in whole or in part to the CDFTA. I don't think that's in doubt. We did nothing to delay the process other than for a couple of weeks after some 900 days. I don't think that's in dispute. The only issue this honorable board will have to decide was it reasonable or not? Was the reason that the CDFTA delayed this, whether it was the legal division, the appeals division, whatever division it was it reasonable? And the record is absolutely void of any reason whatsoever. The only reason they sort of suggest is that we requested an in-person hearing. You can't offer a taxpayer one or two options, in hearing, in person, not in person, and then penalize them for choosing one of the two options they had been given. Again, they never advised us it was going to take longer. The only time they ever did it was when we tried to get the short delay and they said, you got to do it by Zoom, and we did. Or for example, before your honors today, we tried to do it in person. We couldn't do a mix in person and Zoom to accommodate Mr. Schnipper's health. So we said, fine, we'll do it by Zoom. We were ready to accommodate whatever process that we were given. And we were never given any other option other than pick in person or don't pick in person. And we waited 992 days. Again, they don't have any other reason in the record. The reason I submitted to this honorable board, the Gordon case that we submitted at the pretrial conference or report, was it deals with a similar issue. It deals with the FTB, a little bit different of kind of taxes. And that statute is actually more stringent or strict than what we're dealing with here. There, they can abate interest if it's an unreasonable error or delay by an officer of the FTB, which is the same here. But it requires there that they do a ministerial or managerial act. There's no requirement here for that, which occurred after the FTB contacted the taxpayer in writing regarding the assessment. There's no requirement in this statute here. The only thing in this statute requires an unreasonable delay caused by the CDFTA and not significantly caused by the taxpayer. That's the only thing. And in the Gorn case, the OTA, who used an abuse of discretion standard there, said the FTB abused their discretion when there was a 248-day delay. So in Gorn, we got 248 days, abuse of discretion standard, and the OTA abated the interest. Here, we have a less stringent standard. We have 992 days delay. You can use that time frame, or certainly at a minimum, the 732-day time frame from the time that it was under the control of the legal division from when we requested this hearing. And again, we did nothing else other than say we want it in person. And I believe that purely from a legal standpoint, they have no defense in this situation. And the only thing before the OTA was it unreasonable? And I understand the OTA opinion that I cited was the FTB, but it also says precedential on the top of the opinion, that it's precedent for the OTA to be able to use that as guidance. I did a Lexis search of the 6593.5, which deals with sales tax. There are no reported cases in California that I could find I've done it several times. I did it again this morning. There is no guidance with respect to that, but the Gorin case does give us great guidance. And so I think if the interest is abated, we're in a different situation. And as I've said many a times, whether it's in consideration or not, this case is so important to us. This is the business death penalty to us. That's why we have to go through all this processes. We're not some huge margin business. We're not some big, I think we're down to 12, 13 stores. And that's why this is so important to us. And we expect that after we present the evidence from Mr. Schnipper and also the consideration of the legal issue, that we respectfully request that you reduce the amount of the base tax to $100,540 and that you abate the interest while we've waited on this for years at no fault of our own. Thank you.
All right. Thank you, Mr. Yagmai. Would you like to present Mr. Schnipper and his testimony now?
Yes, sir.
Okay. Go ahead.
All right. Could you please tell us your name?
Stephen, Stephen, Schnipper, Schnipper.
And Mr. Schnipper, are you an accountant?
I am.
And are you familiar with the sales tax audit process?
Yes, sir, I am.
And can you give us a ballpark idea of how many clients you've represented the taxpayer in a sales tax audit?
Over the last 40 some odd years, about 200.
And that's you on your own. I'm talking about outside the attorneys getting in the way. That's you on your own, correct?
That's correct.
And you've done this in multiple states, correct?
I've done it in 4 to 5 states, yes.
And are you familiar with the cell phone process and the taxes regarding cell phone dealers?
Yes, I am.
And have you been the sole representative for a taxpayer in cell phone sales tax audits?
Yes, I have.
Can you give an approximation of how many times?
I have probably represented about 20 cell phone cases over the period. And I would say that I've probably been involved in 18 of them on my own.
All right. And have you prepared sales tax returns or have you strike that? Have you prepared income tax returns for cell phone dealers?
Yes, I have.
Can you give us a ballpark of how many?
Be kind of difficult. Probably in the area of about 150 or so.
All right. And are you familiar with Cricket cell phone dealers?
I am.
And is that through representing them in sales tax audits?
Representing them in all tax matters.
Okay. Income tax, sales tax, all tax matters?
That's correct.
Are you familiar with the POS system, the RQ that Cricket uses?
I am familiar with it. Of course, it's no longer in existence, but at the time of the audit, it's the retail management solutions is what they call it. And it's unique to the telecom industry.
And as the dealer, like Sukar, when the audit was in, the audit period that we're talking about, did they have the ability to alter the POS system with regards to the cell phone sales?
No.
All right. So Cricket controlled all of that, correct?
That is correct.
Are you familiar with the term trailing credits with regards to cell phones?
I am.
And tell us about that.
Basically, the phones are purchased by the dealers, by the franchisees at a retail selling price. The phones are then offered as an enticement to have people come in to sign up for the prepaid wireless communications. And the phone, again, is basically an incentive. So if a phone is $500, Cricket may decide to run that phone for $299 as a incentive. So when that occurs, if the software works properly, the customer pays the $299, but they pay the sales tax on the entire amount of the purchase. That's where the rebate trailing credit situation comes in. And with that trailing credit, the dealer ends up with a credit against their balances for the telephones they purchased.
So that in that scenario, they'd get a $201 credit on inventory, not cash credit, but an inventory credit when they have to order more phones through Cricket, correct?
That is correct.
But the customer, they're supposed to collect the sales tax on the entire $500 in the example you gave us.
That is exactly right.
And so Cricket had the RQ system prior to Q2 of 2016. It was not collecting the proper amount of sales tax, correct?
I found that to be the case, yes.
Okay. But did they remedy the problem starting in second quarter of 2016?
Second quarter of 2016, the problem was remedied.
All right.
Everything prior to that had the issue with the proper amount of taxes being withheld.
They also, I made reference in the opening statement. Do you know what TO payments are? TIO, the acronym?
Those are the payments that are received from various customers for their continued service with Cricket. Since it's a prepaid wireless, it has a drop dead date, due date, and the customer is obligated to come in prior to or by that due date and make payment for the next month coming in.
And we've seen it on the bank statements that I think the CDFTA has submitted, where there was a bank statement that just had all the entries were TO payments, correct?
Chase account ending in 1153, and that was the TO account.
All right. And that's something the CDFTA had, correct, and submitted.
Yes.
And Sukar just acts like a pass through to the Cricket Corporation, correct?
That's basically all that the Sukar entities are. It's just
Okay.
a pass.
All right. And so did you have a chance in this particular case to look over the auditor, Miss Davis's complete audit?
I did. There were approximately 5,700 pages submitted, and I was able to scan those pages and extract from those pertinent information, which I downloaded. Also, I think it needs to be noted that I've only been on this particular case for about 60 days. So this has taken the entire length of time to be able to go through those documents and to try to formulate what is going on here with the methodology and everything else and correct it.
Okay. And what else did you review to give us your opinions here today, other than the sales tax audit performed by Miss Davis?
Well, I started off with just trying to put the history of the company together first to get a grasp of everything, number of stores in existence during the audit period. I reviewed the audit documents, various letters, various calculations and recalculations for the purpose of the audit. I reviewed the bank statements for a period. I reviewed the sales tax reports that I was able to obtain from the California website, and I was able to review RQ reports for the most part. I did have missing reports for 2015. At that time, they were with a company called Unique Accounting, I believe based outside of Las Vegas, and I had no records whatsoever for 15. And I believe that was one of the contentions that Ms. Davis and the prior account auditor had. So I had to come up with a method to be able to distinguish what we thought the 15 was, and using the basis for the sales tax paid to California, it was no question that this was severely understated. So the 15, all 4 periods of 15 were understated. First period of 16 was understated. So I had to use future information, being the 2016, which actually had more stores at that time and volume was greater. And I used those numbers to come up with numbers that would give me the total gross receipts, the non-taxable and the taxable. And I came up with significant issues on those periods. On 17, I'm sorry, on second quarter of 16, the RQ report changed dramatically. It started distinguishing the trailing credits or the rebates. And you could see a tremendous uptick in the amount of taxes collected and paid for those periods going forward. That's never deviated. So basically, the concession to make is that for the 5 periods, 4 and 15 and 1 and 16, we are definitely liable for those taxes. But anything beyond that, the reports are correct. And I used the bank deposits also and the tax returns to try to come up with some semblance of the income generated for those periods. And I would have to say that the biggest issue that occurred here, and I think it was frustration on both sides of the fence from what I could read, was that there was lacking information and that the methodology became skewed because of that lack of communication. So I believe that we put forth a very honest report in trying to own up to our tax liability, but also to defend the fact that the going forward from the second quarter 16 on, that we're dead on as far as the taxes paid, taxes collected, and everything was done properly.
Okay, what I submitted to the board a little while ago, you provided a chart to me for the uh, quarter of for the all of 2015 and the first quarter of 2016. You
That's
had it in a printed out form that broke down the gross sales, the non-taxable, the taxable, and the underreported, correct?
that is correct.
Can you go through that with us?
I can. So basically, what's going on is that instead of what was reported on the tax returns for those periods. Hello?
Yes, go ahead.
I'm sorry, we blanked out.
Yeah.
The tax return, going through the tax returns that were reported for those periods and comparing them with the methods I used to calculate. I showed that in 2015 first quarter, we underreported $84,862. And that's in second quarter, we underreported $41,036. Third quarter, $23,056. We had growth at the end of 2015. They went from about 6 stores, picked up 2 in the very last end of the third quarter, and then grew to 18 stores by the fourth quarter. So the underreported amount there was $235,558. And in first quarter 2016, the growth was also there. And also it's an important period because it's tax season, which is one of the main holiday areas for this business. And we underreported $460,013. So the total underreported for those 5 periods is $844,525. Beyond that, I don't see any underreporting whatsoever.
And is
Uh,
that I'm sorry, go ahead.
no, I'm sorry, go ahead.
So based on that number of the underreporting of 844,525, is that how you come up with your opinion that the base tax that Sukar owes is $100,540?
I went ahead and took the liberty of adding about 20% just for a safety net in case my calculations were not 100%. And like I said, the fact of it is I could use statistics and I can use the future information to try to formulate this, but I want it to be totally upfront about the situation, and adding that in is how I came up with the $100,540.
Okay. And let's talk about, I know you've talked about it some, and then based on the numbers starting Q2, it's your professional opinion that the proper amount of money was paid in sales tax, correct?
That is correct.
And tell us what the numbers showed to you starting Q2 of 2016.
If you can give me just a second, I'm going to
Sure.
pull up the report right here. So basically, what it amounted to was I went back and pulled up the taxes paid for Sukar for the period starting from January through March 15. Our base tax that we paid was $5,347. In the second quarter of 15, we paid $55.73. In the third quarter, we paid $66.65. And in the fourth quarter, $8,019. And in the first quarter 16, we paid $7,308. Our Q system kicked in the second quarter of 16, and basically our tax liability jumped to $30,333 in the second quarter, $23,874 in the third quarter, $31,825 in the fourth quarter.
Well, now, hold on, slow down. You're going a little bit too fast for all of us.
I'm sorry.
Let's go to the first quarter of 2016, it was 7,300 that was paid, correct?
That is correct.
And then the second quarter of 2016, after the RQ system got fixed, the amount paid jumped up to $30,033, correct?
$30,333.
All right. And then the third quarter of 2016, how much sales tax did we pay?
$23,874.
All right. And then the fourth quarter of 2016, how much did we pay?
$31,825.
And then in the first quarter of 2017, since we're still in the audit period, how much did we pay?
$38,982.
In the second quarter of 2017, how much did we actually pay?
$38,514.
In the third quarter of 2017, how much did we pay?
$42,628.
In the fourth quarter of 2017, how much did we pay?
$33,109.
All right. And then the first quarter of 2018,
$48,447.
and then finally, I think the audit ended after what was Q2 of 2018?
The base tax paid was $37,743.
All right.
And the major change in this was the allocation between the non-taxable to the taxable because of the trailing credits kicking in.
And the trailing credits, again, it's important because Ms. Davis, I think, tries to address it in a different way. The trailing credits only was ever given by Cricket to the actual cell phones, not the accessories, correct?
That is, the accessories are totally separate. Only the cell phones received rebates.
And was that one of the sort of things you disagreed with? Well, let me ask you this. Were some things other than the ultimate results, was there some things that you disagreed with the methodology of how Ms. Davis for the CDFTA did her audit?
Well, I think it needs to be stated today that the Cricket franchisee does not make 1 penny profit on these telephones. They're sold at cost. Cost being either full price or cost being the discounted price along with the trailing credit, but not 1 penny of profit is on these phones. The dealers purchase these phones. They basically facilitate Cricket's ability to lure new subscribers through deals or upgrades. The accessories, on the other hand, make up a small portion of the overall business, but there is profitability on the accessories. Even if an accessory is discounted due to overstock or due to dead stock or something of that nature, no rebates are received. So therefore, the taxpayer has the ability to tax the customer on the final sales price, not on the list price.
And during the audit, did Ms. Davis sort of highlight the fact that she had some of the inventory at zero?
She had a great deal of the inventory at zero or at 1 cent. And there were several things that happened on the audit. She acknowledged that the phones did not have profitability, but in June 4th of 18, she suggested a markup on the telephones of 18%.
Well, let me stop you right there. Let me stop you right there. I want to make sure we're clear on that. At one point,
sorry, Mr. Yagwit, can I just stop? I just wanted a clarification for the numbers that Mr. Schnipper had just read. Were those numbers, is he reading from the supplemental additional information that you submitted, or is that from a different source?
that's from the sales tax that were submitted to the state of California. I think they submitted them and we actually submitted them too. They were the sales tax actually submitted and paid through the state of California.
Okay, so that information is included in both exhibits that you guys provided. Is that right?
Correct. Yeah, I think both sides. I looked back. We submitted it in our supplemental, but I think they've also submitted in their original filings too.
Thank you.
You talking about where the numbers where he was testifying about how much sales tax was actually paid?
Right.
Yes, sir.
Okay,
yeah, they're in both sets of exhibits.
Okay, thank you.
Yes, sir.
I'm going to ask a question. If you guys could please refer to the bait stamps so we could actually follow along, that would be greatly appreciated.
Yeah. Yes, ma'am.
Thank
Let me see. I'm trying to pull up the bait stamps of the. So the bait stamps on the actual taxes paid is in the Sukar supplement docs that start at page 3, bait stamp page 3, and they end page 24. So that's the supplemental docs 3 through 24, Your Honor.
Thank
Mr. Schnipper, you started to testify about there was an agreement with no markups on the phone. That was in Miss Davis's audit that she had an agreement with Clint Sukar, who was one of the principals of Sukar.
Actually, I think it was with the accountant, Nathan Goss, that she had spoken
Okay.
with. She did speak with Mr. Sukar on 6/4 of 18, but there were no further details given on that. I think he only confirmed that there was no profitability.
Okay. I'm sorry, I didn't mean to interrupt. So you said some of the disagreements you had with her audit?
Well, in the beginning of the situation, she determined that the accessories made up about 10% of the total sales with a markup of 100%. Later, she came back with a, bear with me while I'm looking through my notes here. Later, she came back and assessed that it would be a 20% for the accessories with an industry average of 131.48%. There was a bait stamp 0040 of the California documents. She came again and said that 10% was reasonable and she didn't want to pursue that and that the accessories appeared to be minor. But it turned out that the accessories became a major part of this audit later on. In the up through November 7th, there were still adjustments made to the accessories, and there was discussion about adding rebate to the accessories for taxation. And that was on bait stamp 0072 to 75. And apparently there was a test run that was made on that same date on document 294, where she stated that she ran a test to sort out the sales, but she did not retain the results of that test. And that was the first of 3 different times that was noted over the course of the audit, that tests were run, but she did not retain any copies of it. The situation with markup accelerated to an unbelievable, uncontrollable step, whereas eventually that it was decided by Ms. Davis that the markup on accessories was 453.88%. And she based that on the fact that she only analyzed 1 month's bank statement, April of 2017. She did not analyze the account comparable, or I'm sorry, the second account on this company that basically was responsible for all of the payments and withdrawals. So somehow or another, she found a purchase in April of 2017 of $89.97 for accessories. She discerned from her downloads, and she had access nearly 5,000 pages of the 5,700 that were submitted or dedicated to line items of each particular sale and item, and the supposed cost, list price, selling price, etc. And from that, she was able to come up with a number, total sales for accessories that 1 month of 40,833, which shows that profitability, 31,836, which comes up with 453% profit. There was also stated that in the month of April alone, that there were 43,175 transactions that took place in these stores, which is impossible. Items sold, that would be impossible. So
Why
what's
is
wrong?
that? Why is that impossible?
Volume of the sales. What I believe happened was that a number of sales that had multi items on them were construed to be one sale only. And in the course of all of this, the biggest issue with the markup is that there's no consideration for any inventory that's in the store prior to April 1. There's no consideration for any inventory left over at the end of April 30th. The $89.97 basically is purported to be a shipment that came in, divided into 24 stores, and immediately was sold in full, not anything left over, for $40,000, which is an impossibility too. These stores.
Why? Wait a minute, let me stop you. Why is that an impossibility?
This is not going to happen in this market. There's no realization of this kind of markup with this caliber for these supplies. None. You have to take in consideration cost of goods sold. Cost of goods sold is comprised of beginning inventory purchases, less ending inventory, and adjustments. And without those factors, it's meaningless. There's also a situation where, if you can bear with me, I'll find it, that after these were disputed, I believe by you, then 4 days later, she absolutely stopped using the 10% factor for sales and increased it. And this is the second time that she ran a test, bait stamp 0015 to 0027, and did not retain it. The situation basically is that she had access to tax returns, and that's going to be another issue. But each tax return had an end of year inventory, and she acknowledged that in some of her reports. So she acknowledged there was over $200,000 worth of inventory, but yet she didn't acknowledge the fact that there was inventory on the floor in the store for this 1 month of April of 17.
So the tax returns that we've submitted at the end of the year show a certain amount of inventory. And then your issue with her April of 2017 that she used across, she picked the 1 month and used across the audit, correct?
That's exactly right. And use the wrong
And,
bank account.
and used the wrong, because there was two different Chase bank accounts, correct?
Correct.
One of them was for the TO that and the pass-through payments, and one of it was for the inventory and everything else, correct?
That's correct.
All right. And so she picked the 1 month and she extrapolated with not considering beginning inventory or ending inventory of that particular month, correct?
That's correct.
And that's where she came up with the 453% markup. Somehow she went from an $8,917 one-time purchase and claims the sales were 40,833 with not considering the existing inventory that was already in the store.
Or what inventory was left out of that $8,900.
And so if you make a mistake or a big mistake on that one particular month and you apply it across the entire audit, then it just inflates the numbers significantly, correct?
Correct. And I do have a report here, which is California stamp 0134 through 01185. And looking at that, it lists columns for along with the product name and the SKU number and so forth. It gives customer names and all kinds of data. It gives a unit cost. It gives a total cost. It gives a list price. It gives a sold for price, a discount price, and a profit, a gross profit. Numerous ones of these are anywhere unit cost of 1 penny. And she had extracted all the zero cost items, and they were enormous. From 1 penny to, let's just say, $2.50 in that area. And she shows everything in there being at such high profit levels. The first item on here is a kickstand with the screen protector. Unit cost 1 penny. Selling price $24.99. Gross profit $24.99. Using these numbers, and it went on to telephones too, even though it's been said over and over again that there's not 1 penny of profit in the phone. She shows numerous phones being sold at gross profit. Examples of what I found were 50-cent items being sold for $30, 25-cent items being sold for $49.99, $1.25 items being sold for as high as $111.37, 16-cent items at $25, and it goes on and on. There's not an item this company can purchase for a penny or a nickel or a dime or a dollar. Taking consideration that even though they may not be high dollar products, freight alone would not allow this product to come in for 1 penny. So the entire markups is skewed, and that has created markup issues throughout the entire audit and the areas from second quarter 16 on through the end of the audit period 6/18. And keeping in mind that because the RQ system failed in the first 4 quarters of 15 and the first quarter of 16 does not mean that the company didn't collect the proper sales tax on accessories, because they did.
It was just the
telephones.
because
And
that's the trailing credit that there was the issue that got fixed in the second quarter of 2016.
correct. That is correct. And in looking at the entire situation, I mean, the entire markup agenda that was taken here should be disregarded because it has no bearing on what this audit is.
All right. Let me ask you this. While we're talking about records, I know at some point they were saying there was not adequate records, but on bait stamp 114, supported by submitted by the state of California, the CDFTA, Miss Nickerson, who was the actual supervisor, says that records provided were adequate for sales and use tax purpose. Based
Uh,
on product detailed downloads, sales tax reimbursement was added to products sold. Are you familiar with that?
Her quote was records provided were adequate for sales and use tax purposes.
Okay. And I know
Yeah,
we had some issues with, go ahead, I'm sorry.
I'm sorry, I don't mean to interrupt you. But one thing that's very important, when I said that 5,000 pages were devoted to single line items, multi items on a page, she had to have had access to the software or to, I can't imagine this being downloaded on paper. She had to have access. When these items are put into inventory, first of all, they have to come from approved Cricut vendors, number one. Number two is they're placed into the system by their UPC code, SKU code. When put into system, the quantities received, the cost, and the selling prices are entered. So basically, by just following this half a dozen categories right here, a little bit further would have given her ending inventory, would have given her the gross profit, true gross profit. She didn't follow through with that.
All right. What other issues do you have with the audit that we haven't talked about?
I have so many that I have to look. Um, the inconsistency in the methodology, it kept flip-flopping from percentages to revisions to various changes in the method of audit. I have a problem with the fact that in mid-audit, when everyone thought they were coming together, the audit changed and it went south for Sukar. And then there was questioning about the tax returns not matching with the sales reports. They're not ever going to match. And there was a question that was brought up by her, which was valid, concerning a nominee payment. And it was on bait stamp 0078 that it was a nominee income was listed on there as a deduction. So basically, if you look at the tax return, the total amount of sales is not going to match if there are matters affecting those gross sales, such as payments to a nominee. It's either proper to reduce income or to increase cost of goods sold. They're more hesitant to reduce cost of goods sold, trying to show a true picture to the company as far as what their gross profit is, whether it's meeting standards or not. So normally they'll deduct that from the gross receipts. There was also issues about the fact that an audit of this caliber that initially created a $12 million liability and narrowed down to $5 million with everybody's hard work should not have been based on 1 month's worth of audit. And it should have been based with the fact of 2 bank accounts, which were knowledgeable to her, to be used. The entire method used of this seemed to be avoiding information that was critical. And it was our records. We may not have had complete records in the beginning, but they pieced things together. We can see that. We had another accountant at 15. I don't know what happened to those records, but from that point going forward, every record that could be obtained was given to the auditor. And again, goes back to Ms. Nickerson saying that it was adequate. In this particular case, she disregarded records that were made available, and she based it. There was no sufficient reason for this. If it was based on a suspicion of anything, then that was wrong. It's against code. And the other part of it is that she did not use a sound and reasonable estimate in trying to conclude this. She did not use professional judgment in assessing these estimates.
Is
And
there any other? Go ahead. I'm sorry.
I'm sorry. I'm saying that because of the fact of the lack of bank statements, the lack of following through with all information, and exaggerating the profit margins. And it continued on to areas that we know were sound reports. Once we got past that first quarter 16, there was no reason to doubt those reports. One thing she did do is, in doubt of those reports, is she provided a letter, or she sent a letter demanding records from AT&T home office in Florida.
And let's
AT&T,
let me clarify something. AT&T owned Cricket, correct?
that's correct. And AT&T, Cricket is a company under AT&T, separate of AT&T, owned by AT&T. With all the research and all the effort that went into this audit, it would have been very easy to find the home office for Cricket in Atlanta versus sending something to a multi-international company in Florida demanding records, which they replied they had no records. If she would have gone to the proper source, they would have provided her with the exact same records that we provided her with.
All right. Is there anything else? So, for example, on her worksheet that she did, she claims we underreported 1,372% of error of taxable income. Is that plausible?
No, sir, it's not.
And why is that?
The let me find that line very quickly. I'm sorry. That would have been in the first quarter of 2016. So
Right.
basically, we were underreported. We showed 86,398 is measured taxable. The actual measured taxable for that period was 546,000, and we admit to that. She added additional taxable measure based on 16, 17, and 18 on cost product detail. She recorded a figure here, recorded versus reported book, and she came up with an audited taxable measure of 1,000,002, which difference of 1,000,001, which showed that 1,373% margin of error. The thing about it is, though, that the 16 return, albeit it was incorrect, there was nothing that would have supported that the taxable measure should have gone into $1.2 million. Nothing.
And that's
And
just based. Go ahead. I'm sorry.
I'm sorry. So looking at the number of stores and looking at the RQ reports in the years after the acquisitions in late 15 and into 16, 40 to 50% of the stores were underperforming. So you can't use an overall basis to try to evaluate for a quarter.
And is there any other issues you had with the audit?
If you can give me just a second.
Sure.
I do know that 2 audit letters were received, 10/17/17 from Maya Tang for audit period 10/1/14 through 6/30/17. And then Ms. Davis got involved with an audit letter on 3/1/18, and she sent that as an email to Bob Brogdon, who was the CPA for the company. Just for clarification purposes, both of these letters refer to this as a routine audit. This was not a routine audit. It was based on the fact that it became knowledgeable that Cricket software was failing. And that's what prompted this audit. Not that it makes any difference. Audit's an audit. But just to show the effects of what happened from 15 on through 18, when we had 20 some odd stores down to 12 stores now. Since we opened in August of 14, our retained earnings for the company are at a negative $2.7 million.
So it's a failing business.
It's a failing business. And
Yeah.
at this point, and it's the profit margin does not change store to store, whether it's a store in Hawaii or whether it's in Alabama or California. There's high cost of doing business in California. And they did not adjust to all of that. And so basically, this entire situation If we were realizing 450% profits and we were realizing profits on phones and everything, we would not be in this dismal situation financially.
I don't believe I have any, and I mean, all your opinions are based on a reasonable degree of accounting certainty. In your opinion,
I have to say yes. I'm
yeah.
sure some people may disagree, but I have to say yes.
I don't have any further questions at this point.
All right. Thank you, Mr. Yagmai. I'll turn over to CDTFA if they have any questions for Mr. Schnipper on cross-examination.
This is Ravinder Sharma. Department has no question. Thank you.
Okay. Thank you very much. Mr. Yagmai, did you have anything else for your main presentation?
I do not, Your Honor. That was just Mr. Schnipper's testimony and the exhibits we've submitted.
Okay. So you have about half an hour left. Reserve your time to be used at the in your rebuttal and closing. I will now turn it over to my co-panelists to see if they have any questions for Mr. Yagmai or Mr. Schnipper, beginning with Judge Long.
This is Judge Long. I do have a couple of questions. Mr. Schnipper, one thing that you said was that the returns and the sales reports would never match. And I'm not familiar with that kind of occurrence. Can you explain that a little bit?
Yes, sir, I can. So when you get the sales reports, the RQ reports that we're talking about, you receive the gross amount, which in this case, what I used was with the vendor rebates, which is important because it includes that trailing credit. Then you have a breakdown between the non-taxable portion payments and so forth, and you have a breakdown to taxable, and it comes back to calculate the amount of tax per district and state. If the let me find a number here I can refer to. So basically in 2017, we had on our tax return gross receipts per California and state and federal income tax of 2,358. Our total gross on the reports was $9,681,000. Excuse me, $9,681,941. There is, in that case, there was a nominee payment. There are two stores in California that have a different investor. And that one of those is located in San Bernardino and one is in Ontario. What the accountant chose to do was for the monies that were paid to that so-called nominee. So the monies owed to him was from the Calidus and CSP money, which is the commissions. So basically, whatever was paid to that nominee was deducted from gross receipts. And like I said earlier, it could either be deducted through gross receipts or added to cost of goods. And in this case, they chose to go through gross receipts. So that's why there's a difference. There's always going to be minor differences. There's going to be things that occur within the system that cause adjustments. But like I said, they're not major by any means, and it shouldn't be a factor.
Okay, thank you. And then, Mr. Yagmai, I do have some questions regarding your timeline and the interest abatement argument.
Yes, sir.
So this obviously references CDTFA's March 8th, 2023 letter, which is Exhibit 2 of CDTFA's Appeals Bureau decision. And I just wanted to verify. So looking at that letter, it looks like settlement consideration was occurring between July 8th, 2020 and March 18th, 2021. But for a portion of that time, the Appeals Bureau was doing like a parallel track. Is that in dispute that was the case?
No, sir. I don't dispute that. I don't. Again, I
Okay.
think we agree on the facts.
But then That makes sense. Okay, fine. And then with respect to the, sorry, I'm flipping between tabs. With respect to the period of time that it was exclusively in settlement, it looks like that was at appellant's request, that appeals defer during that time. Are you alleging that there was, an unreasonable delay during that time that it was solely in settlement?
Not the 85 days. I mean, if you can remove the
Okay.
85 days, you could remove, even if you remove the 85 days from the, we're still over 900 days, I think
And
total, you
then
know.
again, in addition to that, so just looking at the exhibit 2 of the decision, it looks like a appeals conference was scheduled for July 14th, 2021, but it was then deferred until an in-person conference could be postponed. My understanding is that that was due to the COVID-19 pandemic. Is it in dispute that appellant requested that deferral?
I don't remember a deferral. I just remember filling out one sheet of paper that said you can request in person or not in person, and we requested in person. I don't ever remember making a deferral. I disagree with that assertion. I think the only deferral was ever requested was a short, they gave us a 30-day window and that was it. And that was in 2023.
Right, I see that. Okay. All right, so then now that piece of it's in dispute. Okay. Thank you. I don't have any further questions.
Thank you, Your Honor.
Thank you, Judge Long. Judge Ridenour, do you have any questions for either Mr. Yagmai or Mr. Schnipper?
Yes, thank you. It's actually to bounce off of Judge Long's question, Mr. Yagmi. So when did you put in that request, the indication that you wanted an in-person hearing?
I mean, the
Or
initial
conference?
request was July 2nd, 2020 is when we made the initial demand for it.
Okay, so my question is, knowing that that was during COVID, did you not anticipate that maybe an in-person hearing conference would be postponed based on the various protocols and for the
Well,
pandemic?
Well, we had, I mean, I didn't realize it was going to be 4 years or 3 years. I mean, I understand COVID was going on in different stages and different locations. I mean, it was not some discussion. I mean, I believe I followed up with them with another letter, June 9th of 2021. I don't think COVID protocols were in effect as of June 9th of 2021. Certainly, from March 19th of 2021 through March 21st of 2023, which the CDFTA acknowledges was under the control of the Appeals Bureau, there wasn't any COVID protocols it was never presented, hey, it might be 2 years, 3 years because of COVID protocols whatsoever. Anytime it was suggested we need to switch Zoom, we did it. For example, when we asked for the short recess and they gave us 30 days and they said, well, you got to do it by Zoom because we're only available in person 2 days a week or whatever, we did it just like we did for this particular hearing. So it was never presented that it was an either or situation.
I'm actually going to ask CDTFA a question. I'm going to go out of order real quick and miss maybe when did CDTFA Appeals Bureau stop having in-person conferences and then resume in-person conferences for COVID? Someone from CDTFA, please.
Oh, I'm sorry. This is Ravinder Sharma. We stopped doing in when the COVID was declared by the executive order of the governor in 2020. And when the governor declared that emergency is over in 2023, that's when we started scheduling in-person hearing. These are
Okay.
all based on the executive orders by the governor.
Thank you. I just was wanting to clarify for the record.
Thank you.
And one question for Mr. Schneiper. I understand you're testifying that like the 1 cent for the case with screens unit price was unreasonably low, if I understand your testimony correctly. I was wondering if you have any documentation indicating the actual cost.
We can provide this documentation. I don't have anything here with me, It would have been on the program that Ms. Davis examined when she obtained this information. It would have had our unit cost. No, ma'am, I don't have anything to give you today, but I can have it forwarded to your office.
Okay, I will speak with my panelists to that. Thank you very much. No further questions for me.
Thank you, Your Honor.
All right. As for myself, I do not have any questions for appellant at this time or Mr. Schnipper. So what we're going to do is we are going to take a recess. And then when we come back, we will turn it over to CDTFA for their presentation. So we will recess until 2:30. And then, so just please turn off your cameras, mute yourselves, and we'll come back at 2:30 and we're off the record. Thank you. All right, looks like everyone is back. Ms. Alonso, are you ready to go back on the record? All right, thumbs up. Let us go back on the record. Okay, so we were about to turn it over to CDTFA for their presentation, but I just thought of one last question I had for appellant, Mr. Yagmai.
Yes, sir.
So in your briefs, you had talked about this is in regards to the interest relief issue,
Okay.
and you had mentioned in your briefs the word presumption, that there was a presumption that this several hundred-day delay was caused by CDTFA. Did you have any authority for that presumption?
As far as let me refer to the page. You're talking about in the pretrial brief submitted.
Yes.
I mean, there's no case law on it. I mean, I think I was just referring to the Gorin case, which said, the 274 days was a delay. There is not, again, I've shepherdized and tried to find anything on the statute this morning, and there is no case law that says that. But I think that was in reference to that.
Okay. All right. And the specific sentence that I was referring to was, I'll just quote it, by virtue of this time frame, and you had referenced a 574-day delay. It should be presumed that the petitioner has met its requisite burden in proving that CDTFA caused unreasonable delay. But so you think you were referencing Gorin?
Correct. The 248 day delay in Gorin.
Okay, great. Thank you so much.
All right. Yes,
All
sir.
right. All right. We will now turn it over to CDTFA for their presentation, and you will have 25 minutes.
Thank you, Judge. This is Ravinder Sharma. Appellant is a retailer of wireless cellular phones at various locations in Southern California and has been in business since September 2014. The department performed an audit examination for the period January 1, 2015 through June 30, 2018. Appellant reported total sales of around $9.7 million, claimed reduction of $5.4 million for others, and reported taxable sales of $4.3 million for the audit period. Exhibit A, page 31 and 32. Appellant provided books and records such as federal income tax return for 2015 to 2017, sales tax collected report for first quarter 2016 to second quarter 2018, product details download for first quarter 2016 to second quarter 2018, except fourth quarter 2017. Journal ledgers for 2015 to 2017, and bank statements for first quarter 2016. Appellant's sales tax collected reports show taxable sales of $4.6 million for first quarter 2016 to second quarter 2018. However, appellant only reported taxable sales of $4 million, resulting in unreported taxable sales of $600,000 for first quarter 2016 to second quarter 2018. Exhibit A, page 42. Appellant's product details reports for first quarter 2016 to second quarter 2018 reflect audited total purchases of $9.3 million. Exhibit A, pages 72 to 75 and 187 to 5,565. During the audit process, the department noted that appellant leased phone through a third party. The department used product details reports and determined total leases of around $2 million for the audit period. Exhibit A, page 25. Using the product's detailed reports for April 2017, the department determined an accessories purchase ratio of around 4%. Exhibit A, page 23 and 134 to 186, and calculated audited markup of 454%. Exhibit A, page 24. The department used total purchases of $9.3 million, adjusted for total leases of around $2 million to calculate taxable purchases of $7.4 million. The department applied ratio of 4% to taxable purchase of $7.4 million and determined audited accessory purchases of $300,000 for first quarter 2016 to second quarter 2018, which were then marked up with an audited markup of 454% to determine audited taxable accessory sales of $1.7 million for first quarter 2016 to second quarter 2018. Exhibit A, page 20. Based on its review of product details report, the department determined that phones were sold at cost. So audited taxable sales for phones were determined to be $7 million. Then the department combined audited taxable phone sales of $7 million with audited accessory sales of $1.7 million to calculate total audited taxable sales of $8.7 million for first quarter 2016 to second quarter 2018. Appellant reported taxable sales of $4.6 million, resulting in unreported taxable sales of around $4.2 million for first quarter 2016 to second quarter 2018. Exhibit A, page 19 and 20. Due to lack of books and records for first quarter 2015 to fourth quarter 2015, the department used unreported taxable sales for the period second quarter 2016 to second quarter 2018 to determine average quarterly sales of around $33,000 per location. The department used the average quarterly sales of $33,000 per location and multiplied by the number of active locations to determine unreported taxable sales of around $1.1 million for first quarter 2015 to fourth quarter 2015. Exhibit A, pages 12 to 14. Based on the stated audit procedures, the department determined unreported taxable sales of around $5.9 million for the audit period. Exhibit A, page 12. When the department is not satisfied with the amount of tax reported by the taxpayer, the department may determine the amount required to be paid based on any information which is in its possession or may come into its possession. It is the taxpayer's responsibility to maintain and make available for examination on request all records necessary to determine the correct tax liability, including bills, receipts, invoices, or other documents of original entry supporting the entries in the books of account. If a taxpayer's records are insufficient or proven unreliable, it is appropriate for the department to compute and estimate the taxpayer's liability by alternative means. The burden of proof is upon the taxpayer to prove all issues of fact by a preponderance of the evidence. The taxpayer must establish that the circumstances it asserts are more likely than not to be correct. In the case of an appeal, the department has a minimal initial burden of showing that its determination was reasonable and rational. Once the department has met its initial burden, the burden of proof shifts to the taxpayer to establish that a result differing from the department's determination is warranted. Unsupported assertions are not sufficient to satisfy a taxpayer's burden of proof. The department used appellant's books and records to determine the audit liability. Doing so produced a reasonable and rational determination. Appellant contends that the markup of 454% is too high. In response, the department submits that it used appellant's books and records for April 2017 to determine an audited markup of 454%. As of now, appellant has not provided any documentary evidence to support a lower markup. Therefore, no adjustments are warranted for this contention. Appellant is also seeking relief from interest. On May 10, 2023, appellant filed a form CDTFA 735 requesting the department grant interest relief based on an unreasonable error or delay by the department's employees. Appellant signed the form under penalty of perjury, seeking relief from interest that has accrued from July 2, 2020 to March 21, 2023. However, appellant failed to allege any error by the department's employees. Instead, it merely contends that it should not be penalized for the delay in setting the appeals conference. Finally, appellant asserts that it had no fault in the delay in setting the appeals conference. Exhibit F, page 5700. The imposition of interest is mandatory. There is no statutory right to interest relief. Instead, appellant must qualify for relief under one of a limited number of provisions. Only section 6593.5 is arguably applicable. It is important to clarify that interest is not a penalty. It is merely compensation for the taxpayer use of money that should have been paid to the department. Further, the department notes that it automatically granted relief of interest that accrued on unpaid taxes from March 2020 through June 2020, consistent with governor's executive orders due to COVID-19 pandemic. Despite appellant's failure to cite any error by the department's employees, the department has reviewed the timeline and concluded that none of its employees caused an unreasonable error or delay to occur in this matter. Exhibit D, page 5690 to 5692, page 5697, Exhibit F, page 5719 to 5721. As the timeline shows, this case was moving without any delays. On May 28, 2021, the department sent appellants a notice of appeals conference scheduled for July 14, 2021. The notice advised appellant that due to the COVID-19 health crisis, all appeals conferences were being conducted by telephone or by video. This statement is added as a note on this letter. Then on June 9, 2021, appellant elected and signed a letter to have its appeals conference postponed until it could have an in-person appeals conference. Exhibit F, page 5657. Upon receipt of this election, the department sent an acknowledgement letter confirming the matter would be taken off the calendar until an in-person conference could be scheduled. Then the matter was properly removed from the calendar until in-person hearings were permitted. When the governor declared an end to the COVID emergency, the department immediately on February 3, 2023, notified appellant of a new in-person conference date of March 21, 2023. Appellant postponed the hearing to April 4, 2023 for an in-person conference. The conference was eventually conducted on that day as a video conference. The only reason the appeals conference was not held on July 14, 2021 was the fact that appellant postponed the conference date. There was no error or delay on the part of the department. As a result, appellant's request for interest relief under section 6593.5 was properly denied. Without filing any additional statement under penalty of perjury, appellant has made additional contention regarding interest abatement. First, appellant claims that it was never informed that interest would continue to accrue while its case was postponed. Appellant asserts that if it had been notified, it could have made an informed decision about whether to proceed virtually or not. Second, in its pre-hearing conference statement, appellant seeks interest relief from the time of the appeal to the Office of Tax Appeals until the hearing date of December 9, 2025. Again, appellant has failed to identify any unreasonable error or delay by the department's employee during this secondary period. Moreover, the department notes that appellant was provided various letters which specifically stated that interest would keep accruing during the appeals process. These letters are: number one, department's letter dated May 29, 2019, Exhibit A, page 113. Second, the department's letter dated May 28, 2020, Exhibit A, page 109. Third, the department's letter dated December 13, 2023, Exhibit A, page 2. Fourth, the Office of Tax Appeals letter dated August 1, 2024. After reviewing all available documents, the department determined that it has followed appropriate timelines and there were no unreasonable delays by the department. No adjustments are warranted for this contention. Based on the foregoing, the department has fully explained the basis for the deficiency and proved that the determination was reasonable based on the available books and records. Further, the department has used approved audit methods to determine the deficiency. Therefore, based on the evidence presented, the department requests that appellant's appeal be denied. This concludes my presentation and I'm available to answer any question you may have. Thank you.
Thank you, Mr. Sharma. I'll now turn to my co-panelists to see if they have any questions for CDTFA, beginning with Judge Long.
This is Judge Long. I just have a couple of questions regarding the May 28th, 2021 conference notice, the appeals conference notice. Is that in the record anywhere?
This is Ravinder Sharma. No, it is not part of the exhibit we submitted, but that's the letter we have. If the panel needs, we can provide a copy of that.
Okay. Do you have the June 9th as well, the June 9th response?
June 9th is attached, signed by the appellant as a exhibit, page 5657. Let me correct it, make sure. Yeah, it's a page 5657 that is attached as a exhibit F, which is signed by appellant's attorney.
Okay, thank you. Okay, I'll leave it. I'll defer to Judge Wong as to whether we would like to have a copy of the May notice in the record. I have no further questions. Thank you.
You, Judge Long. I'll turn to Judge Reitnauer for any questions for CDTFA.
Judge Ridenour, I cannot hear you.
Sounded a little garbled. Is there a microphone issue?
Can you hear me now, reporter? Hearing reporter?
Very faintly.
How about now? Can you hear me a little bit more?
A little bit more, yes.
Okay. I will hold off my questions.
Oh, okay. All right. So I just wanted to give CDTFA an opportunity as far as my questions. Is there any just give CDTF an opportunity to address Mr. Schnipper's presentation? Did you have any response or commentary about that? CDTFA.
This is Ravinder Sharma. We don't have any original document of supporting documents for all the calculation which the appellant provided during the presentation. The only thing department can add at this time is this audit is based on the actual purchases, based on the products detail reports, and the phones are assessed at cost. These are appellant's own records which provided the total purchases, and as of now, appellant has not provided anything to refute that the total audited purchase of $9.4 million are not correct, or audited markup of 454% is not correct, or the percentage of taxable accessories of 4% is not correct. And without looking at the actual documents supporting those calculations, department cannot provide any further explanation at this time. Thank
Okay.
you.
Thank you, CDTFA. All right. Let me double check with Judge Ridenhour to see if her microphone issues may have been resolved. Could we just do a quick mic check? Hello?
Hello?
Okay. Not great. Okay. Judge Ridenhour has typed out a question, and let me just see it, and then I will relay it to CDTFA. Okay. So CDTFA, did you have a response to Mr. Schnipper, an appellant's questioning whether the reasonableness of using 1 month, April 2017, for the liability period? So I think using that as a test period, I believe. Did you have a response to that? Hold on
Yeah,
just a second.
this is Ravinder Sharma. Using a block sample of 1 month is a accepted order procedure. It's approved and it's done by the department in all the cases. The copy of the test and everything was provided to the appellant, and as of now, appellant has not provided anything to refute those numbers or refute the audit findings. Because there were many opportunities given to the appellant during the audit procedures or appeal procedure to provide or select another month if they want to and show that the markup was lower or find errors in the markup calculated by the department for April 2017, the test period.
Okay. Thank you very much, CDTFA. All right. So with that, we will now turn it back to appellants for a final time for their rebuttal and closing. So I will turn it over to Mr. Yagmai, and if he I'm not sure if Mr. Schnipper will be also be providing anything at closing, but just a reminder that Mr. Schnipper is still under oath if he does. You have about 30 minutes. Thank you.
Mr. Schnipper, can you hear? You're on mute right now. Okay, you're off mute now. Did you hear what Mr. Sharma presented to the court?
Yes, I did.
Do you have anything in response with regard? Let's start with you're familiar with the markup in general in the cell phone industry, aren't you?
Yes,
Based
I
on
am.
your experience that you've testified, is 453% the generally accepted markup in the cell phone industry?
It's not conceivable.
And tell us why.
Basically, because it's such a competitive market, you cannot overprice a product. You're trying to retain a customer, the big picture being to retain a continued communications customer. You can't take advantage of the situation. And like I said, there are too many competitors out there that sell the same products, including Walmarts and everything else. There's no way that the customer is not savvy enough to realize that they're overpaying a tremendous amount of money for accessories. Basically, the acceptance of the 453.88% cannot be justified. Once again, the formula, whether it's stated that it is acceptable or not, makes a little difference to me. Common sense is what makes a difference to me. The fact that there were a purchase with the total amount of sales, and I did not question the sales, but I questioned the item for the formula for the markup. During that period, April 17 was coming to the end of tax season. So basically, the stores were well stocked from mid-January through the end of March because of tax refunds. If you go back 1 month prior, to the bank statement from the bank account that she supposedly used. And then I have to refer back to the other bank account that was not used. I find several entries, online purchases from overseas for supplies. I find a .com company in California that they purchased from. And I also see extensive expenses with the American Express card and Chase credit card, which a lot of that was used to either settle accounts or was used to purchase. So basically, on the same token, that being in this picture a short time as I have, I've never seen anything that came across that basically asked us to support any additional purchases. This became almost an obsession with the auditor, going from a 123% national average to 453%.
So in her actual audit, she has in there that the national average was 123%, right?
That's correct.
And then she isolates on this 1 month, and you've already explained the lack of the consideration of the beginning and ending inventory. Let me ask you this with regards to Mr. Sharma saying that you haven't, with regards to your calculations. I mean, that was a summary of your calculations in the document that we looked at, correct?
That is correct.
And that's just based on the exhibits that are already into evidence before this court, correct?
That is correct.
So it's not some new documents you made up or relied upon. It is already in the record, right?
It is already in the record, and it's acceptable practice for accounting.
All right. Is there anything else that you think, I want to make sure that I'm not missing anything that you want to address that Mr. Sharma said?
I'm still questioning some of the numbers, where they've come from as far as sales and purchases and so forth. I'm not armed today to be able to go over those numbers that Mr. Sharma provided, but some of those are not or don't seem to be correct. Now, he's going strictly off the audit report, which is basically just a verbatim of what's already been declared by at this point today. The department has not yet shown anything that supports anything more than the verbiage that went into the final audit report.
Okay. Do you have anything else you want the board to consider?
I am going to honor the request for invoices if it's acceptable by the court, and I'll monitor those through you, basically to prove that there is no such thing as a 1 cent item, and basically to disprove the markup situation.
Let me just jump in here. Let me just jump in here really quick about that. Yes, the panel will be requesting documents from both parties. I will cover that after the presentations, and I'll get into that later. Thank you.
Thank you, Your Honor. Do you have anything else, Mr. Schnipper?
Not at this time, I don't.
Okay. If you could go ahead and mute your microphone, that'd be great.
Go ahead. I'd like to thank everyone here. I appreciate the time that's been given to me.
Can he be excused, Judge Wong, or?
Certainly, yes. If he need be, yes. I will. Any requests from the panel, I will direct to you, and then you could channel that to Mr. Schnipper as needed. But we thank Mr. Schnipper for his testimony today. Thank you.
Thank you, Judge Wong.
Anything else, Mr. Yagmai, in closing?
I don't have anything as far as just a brief closing. I mean, I know we've been here a while. There's a couple of things I want to point out, and I understand the process, and we're not in a court of law, and I've been through these sales tax issues in a couple of other states, but all Mr. Sharma did was, as Mr. Schnipper pointed out, was just reread the audit. And I would ask the board to give that towards the weight of the testimony. We have presented a live qualified witness subject to cross-examination, which they undertook no cross-examination, which in my view is an acceptance of what Mr. Schnipper said. I mean, if there was some contradiction of what he said or some impeachment of it, he would have been cross-examined. But the fact that they asked 0 questions, I think the board should take the weight of the testimony. We have basically a hearsay within hearsay within hearsay. And I understand it's admissible. We're not in a court, but what they have presented is just an audit document that's replete with hearsay. Quite frankly, I'm surprised they didn't present Ms. Davis's testimony to be subject to her credibility, her methodology, or anything in front of this board that would be subject to cross-examination. She has never been subject to cross-examination under oath or any not under oath. And so the idea that they're just going to reread the findings of an audit and not put their witness up subject to cross-examination while we present an expert who is subject to cross-examination should go towards the weight of the decision. And I understand this might be the normal process, but still in the due process of the whole situation, I think I would request the board to take that into consideration because there's nothing to dispute what Mr. Schnipper said that was backed up by the numbers that we underreported in 2015. I think we can all agree upon that. The amount of it we disagree upon, but they didn't cross-examine him on how he came up with his figures. I mean, he told us how he came up with the figures in 2015. He conceded it. He didn't say, oh, we don't owe a penny, because that's not true. And so his numbers, as far as us owing 100,545, as far as before this board in live testimony, has not been contradicted. I mean, I don't know what else we can do because he relied upon the documents that are already in evidence and that we supplemented that were received without objection. So if you take that testimony that has not been challenged, I think we've overcome whatever presumption we have to defeat or whatever that we have the burden, if we have the burden to convince this board, because they've got nothing to contradict it with regards to the factual testimony and the audit, because it was consistent. I mean, what he said was logical about this 1 month that was selected, that they said to try to use it across the board, that it was not considered the tax season month about what the inventory was. I mean, it's just an error on the face of it if you are not considering the cost of goods or the beginning or the ending inventory of a particular month, if you're just going to apply it across the board of a 48-month audit, or how many ever months the audit was to apply it. And so they may say it's acceptable, and maybe it is acceptable, but in this situation, the math doesn't bear out for the reason that Mr. Schnipper testified to. The second thing with regards to Mr. Schnipper, they have nothing to contradict. I mean, they had the ability to get in touch with Cricket, AT&T, whoever. I mean, the testimony as it stands now is that the RQ system was fixed, and we have the numbers to bear that out. He went through painstaking detail of how the sales tax that was paid jumped up by 300, 400% starting in Q2 of 2016 when the RQ system was remedied. I mean, that's not in dispute. They're in the record about the amount of sales tax that we actually paid, of how they were small amounts in 2015, and then they quadrupled, tripled, quadrupled starting Q2 of 2016. That confirms and verifies and corroborates Mr. Schnipper's testimony, which has not been challenged. And when you take that into consideration, and all that the board is that the CDFTA has presented is just a recitation of what the auditor that's not here found in her particular audit. With regards to the abatement of interest, they now sort of say, well, I signed this, and now I do see it in the record. I didn't see it before. Signed some document saying we want it in person, but I would still argue it's an unreasonable action. You can't offer. I mean, this goes to the other argument that we presented about estoppel. We presented that in our presentation in our pre-conference hearing, that the elements of estoppel by the government is that they're superior to the knowledge. They can't offer something that doesn't exist. They're saying, well, we had COVID restrictions, and therefore, then how can you offer something that doesn't exist? Again, in 2021, in courts across the country, I understand California was a different situation, but there's courts going on across the country. We're here in Alabama, I'm going to different courts across the country, but to suggest that, oh, we're excused because we've offered that something doesn't exist, is the definition of unreasonable. No matter how you break the time frame down, whether you start the trigger date of July 2nd, 2020, or you bring it later on after this June 9th letter, or you bring it later on to up to March 23rd of 2023, to say, well, we didn't have any duty to notify anybody, or we didn't have any duty to offer something that doesn't exist. I mean, I think that violates the California, Taxpayers Bill of Rights. I think it violates Gorin. And I think that nothing that they have said has stated otherwise. Like in Ms. Doe's appeals hearing denial, she just said it was not unreasonable. But to suggest that we had some sort of duty to not select something that didn't exist. And that is our position there, because again, we're talking about hundreds and hundreds of thousands of dollars that they say we're taking it, it's not a penalty, but we're utilizing. We're not utilizing, we don't have it. And so the purpose of interest is to not give us a windfall while the appeal is going on. That's not occurring here. I mean, I think the testimony is undisputed about the financial condition of the company. So to penalize a company for selecting something that's offered to them, and then they say, well, never mind, we couldn't really offer it, is the definition of unreasonable, regardless of COVID restrictions, not COVID restrictions. All they had to do was say, well, we're never going to offer it, or you need to switch like we did here today. And I think the only evidence presented to this board is that the taxpayer made an error in 2015 based on cricket, but we accept the responsibility. That's why we didn't get penalized with negligence. If we really had a 1,372% error in the first quarter of 2016 that Ms. Davis contends in her audit that is solely relied upon, I'm sure we would have gotten hit with negligence, fraud, and everything else. I've never heard of any taxing authority saying that you underreported by over 1,300%. And this just goes to the totality of the circumstances and the big pictures. The taxpayer is trying to do right. We're not hiding from anything. We're not withholding trust tax. We're not doing anything. We got caught in a situation with cricket. That's our responsibility. We're trying to resolve it. We're trying to sit down to see if we can resolve this thing, old school in person, and then we get penalized for it. And again, we're hanging on by a thread, and this is the absolute business death penalty. And we respectfully request, based on Mr. Snipper's testimony and the arguments that we made, that the base tax get reduced to $100,540, and that the interest be abated as the board sees fit for whatever period, because there is so many different time frames. Thank you.
All right, thank you, Mr. Yagmat. All right, for the final time, I will turn to my co-panelists to see if they have any final questions for either party, beginning with Judge Long.
No questions, thank you.
All right, and I will now turn to Judge Ridenauer for any final questions.
Can you guys hear me?
Yes.
Yes, Your Honor.
Okay. I wanted to get a better understanding when you say they offered something that didn't exist. Eventually, you were offered an in-person hearing, no?
Eventually, but I think that's true. Number one, obviously we were offered an in-person hearing at some point, but to suggest that we had the duty to make sure that it wasn't going to exist for 2 years is not the taxpayer's responsibility. I don't think for an appeals conference that the taxpayer should sit there and say, okay, it's our responsibility to make sure this occurs. And that's what I'm saying, that offer something that didn't exist at the time. It didn't exist the next year, apparently. I mean, by 2023, the entire country was open.
Do you have any
2022.
Do you have any correspondence from you or your client between June 9th, 2021 and February 3rd, 2023, inquiring as to the status of the hearing? The conference?
I don't know off the top of my head, to be honest with you. It's not in the record, if that's it. If there may be I can't answer it one way or the other.
Okay, thank you. No further questions.
Thank you.
All right, thank you. All right. I also did not have any final questions for either party, but As I mentioned earlier, alluded to earlier, the panel does have some requests of the parties, mainly documents. So I'm just going to go over that right now. From CDTFA's, and I'm going to issue a post-hearing order specifying exactly what these documents are, and I'll be laying out some deadlines for that. But from CDTFA, I believe we wanted a May 21st, 2021 conference notice. Let's see, double check. Judge Long, is that correct? May 21st, 2021 conference.
May 28th,
28th.
2021.
Thank you. Yes, May 28th, 2021 conference notice from CDTFA. And then from appellant side, we were looking for substantiation as far as the cost of accessories that was Mr. Schnipper had alluded to earlier. And also, so Mr. Schnipper was also testifying in his capacity as a expert witness. Is that correct, Mr. Yagmai?
Yes, Your Honor.
Okay. Under the rules for tax appeals, we would like to request a summary of his credentials as well as a brief summary of his testimony. I had not realized prior to this hearing that he would be testifying in the capacity of an expert witness. So we just would request that from him. And then just to clarify for CDTFA, perhaps we would request all correspondence regarding scheduling a hearing in this case. And I will list all of these items out for both parties in my post-hearing order, which I hopefully will issue later this week or early next week. As far as deadlines go, I realize there's a couple of holidays coming up. Mr. Yagmai, would 45 days be adequate for you to provide those requested documents?
Yeah, I'm sorry. I know it's going to be in the order. Is a summary of credentials, and what was the second? Summary of testimony, or?
Yes, it's basically a summary of his credentials and a summary of and nature of his testimony.
Yeah, and 45 days would be more than sufficient, Your Honor.
Okay, so it'll be 45 days from when this order is issued. So just be looking out for that, and then we'll turn it over to CDTFA for response plus the correspondence 30 days. I'll give you CDTFA 30 days after Mr. Yagmai has provided his documentation, and then we'll give. I'll say right now we'll give Mr. Yagmai the last word for a final response tentatively, but we'll lay that out in the order. So Mr. Yagmai, you'll have 45 days, CDTFA 30 days after that, and then perhaps you'll have 30 days for the final response. Does that make sense?
Yes, Your Honor.
Hopefully it'll make sense after I issue the order, but anyway, so be on the lookout for that, okay? So that will conclude the hearing. The evidentiary hearing record is not closed. We're going to keep that open. And then after we receive all the responses, then we'll close the record and the panel will decide the case and issue its opinion 100 days from when the record closes sometime in the future. All right, so I appreciate both sides for your presentation. I appreciate Mr. Schnipper's witness testimony. Thank both sides on behalf of the panel. This oral hearing for this case is now adjourned. There are no more hearings for today or this week or probably for this year. So that's it. Thank you very much, everyone.
Thank you, Judge.
Thank
We're
you,
off
Your
the
Honor.